and gentlemen, good day and welcome to AGS Transact Technologies Limited Q3 FY2024 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Goyal. Thank you, and over to you, sir.
Thank you. Good morning, everyone. On behalf of AGS Transact Technologies Limited, I welcome and thank each one of you for joining our Q3 and 9 months FY24 earnings call. On this call, I am joined by our CFO, Mr. Saurabh Lal, our Executive Directors, Mr. Stanley Johnson and Mr. Vinayak Goyal, and Managing Director of our subsidiary Secure Value India, Mr. Shailesh Shetty. We have uploaded the financial results and investor presentation on the stock exchanges as well as on the company's website for your reference. Over the past 10 years, financial inclusion for all has been one of the key initiatives of the government. In the recent interim budget, Finance Minister has earmarked rupees 60,000 crore for the Pradhan Mantri Kisan Samman Nidhi Yojana. These initiatives are positive for cash transactions in the country. Further, leading banks are expanding their branches with focus on Tier 3 and Tier 4 towns. This signifies expansions of ATMs and CRMs in the country. The Finance Minister in the interim budget also earmarked about rupees 1,441 crore for the promotion of RuPay debit cards and low-value BHIM UPI transactions for person-to-merchant transactions. Further, the RBI has yesterday unveiled a framework for authenticating digital payment transactions, which aims to enhance digital security through a principle-based approach. There are plans to introduce additional functionalities of programmability in CBDC retail payments to facilitate transactions for specific targeted purposes and allow offline capability to enable these transactions in areas with poor or limited internet connectivity. Together, these initiatives will bolster the adoption of digital payments in our country. Additionally, the successful launch of UPI in France is a global testament to India's digital payment revolution. Across our businesses, we have multiple running contracts in ATM outsourcing, cash management, and other banking solutions, with esteemed customers, which gives us annuity business. As a strategy, we are looking to expand our service businesses, and in line with this strategy, we have won 3 major contracts which we had announced in the quarter gone by. These brief details of the contracts are as follows. We won an order of about rupees 1,100 crores to deploy 2,500 plus ATM under outsource segment from State Bank of India. This is a 7-year contract under our payment solution business. Our cash management subsidiary Secure Value will be servicing significant number of ATMs under this contract. Further, we have received order for 1,350 ATMs from State Bank of India under the banking automation solution segment. This includes the sale of banking automation solutions and long-term annual maintenance contracts. The execution of these orders will begin in Q4 of FY24 and its impact is expected to commence during FY25. We also recently completed the deployment of 270 dedicated cash vans for UBI and Canara Bank. The order value of this contract would be around 250 crore over 5-year term. All these orders from the leading public sector banks will help us expand our scale of operation and further solidify our position in the market. With regard to our digital payment initiatives, we recently commenced pilot testing of open loop contactless fuel payment solution on the OnGo app at select fuel retail outlets of one of the leading OMCs in Mumbai. We have onboarded 580 plus fleet vehicles in the pilot phase. This is expected to strengthen our strong foothold in the OMC sector, having market size of approximately rupees 8 lakh crore. This is also in line with our overall digital business strategy to provide convenience on the go, which entails issuance of prepaid cards such as NCMC, that is National Common Mobility Cards for Bangalore Metro Rail Corporation. We are strategically looking at further issuance through OnGo platform and expect to convert this into next 12 months horizon. So far, we have issued approximately 34,700 NCMC cards for Bangalore Metro, and we have a very big addressable market in Bangalore for this. In terms of revenue for this, we will be earning interchange on spends through these cards. Additionally, we have a growing presence in Southeast Asian countries. We are strategically looking to leverage our industry expertise in these countries by the way of external investments and monetization. With this, I hand over the call to Saurabh, our CFO, to take this further.
Thank you, Ravi. Good morning, everyone. Let me allow you to take you through the financial performance of the company for quarter 3 and 9 months ended FY24. In the Q3 of FY24, the total income of the group stood at 3,840 million versus rupees 4,248 million in the Q3 of FY23. This is partially attributed to scaling down of our other automation business. Also, with the reduction of this other automation businesses, there is also a simultaneous reduction in various associated costs to this business. However, we still have some cost in this business as we continue to service some of our old long-term contracts. There were some one-time expenses also during the period. During the Q3 of FY24 and Q2 of FY24, we reassessed the recoverability of certain aged receivables and conservatively provided for a loss allowance of 346 million INR and 450 million respectively in the last quarter. Further, in H1 of FY24, we provisioned about 395 million towards one-time commitment fees, of which 120 million was reversed in this current quarter. Talking about the EBITDA number, in Q3 of FY24, our adjusted EBITDA stood at rupees 914 million in Q3 of FY24 as compared to 1,171 million in Q3 of FY23. The adjusted EBITDA margin for Q3 FY24 remained at 24% Q&Q basis as against 24% in Q2 of FY24 also. And this was around 28% in Q3 of FY23. From the profit after tax perspective, we recorded a loss of INR 154 million as against loss of 609 million in previous quarter and a profit of 124 million in Q3 of FY23. I would like to highlight that our consolidated net debt is reducing on quarter-on-quarter basis. While there have been some exceptional items, we have continuously worked towards to ensure that we optimize all our costs corresponding to our revenue. Our business continues to generate a sufficient amount of cash back. Coming to the 9-month numbers of the group, the total income in 9 months FY24 stood at INR 11,520 million versus 12,726 million in 9 months FY23. The adjusted EBITDA stood at 2,881 million in 9 months FY24 versus 3,675 million in 9 months FY23. The profit after tax for 9 months FY24 stood at the loss of 756 million in 9 months of FY24 as compared to profit of 423 million in 9 months FY23. Just to give you a quick update on our subsidiaries' 9-month performance, Secure Value India Limited, which is into cash business, reported a top line of 3,367 million with EBITDA margin of 17%. It is its non-AGS business, which is a business coming from the non-AGS customers, stood at 1,570 million approximately. ITSL, our digital payment subsidiary, recorded a top line of 1,344 million with a EBITDA margin of approximately 5%. GTSL, our foreign subsidiary, generated a revenue of around 544 million in INR terms with a EBITDA margin of 24%. With this, we'll conclude our presentations and open the floor for further discussions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Ravi Shah from Opal Securities. Please go ahead. Hello, Mr. Ravi.
Yeah, am I audible?
Yes,
Hello?
now you're audible. Please go ahead.
Yeah. Sorry, I was having some issue. So I have 2 questions, sir. Thanks for the opportunity. So can you give some color on the secure value performance in terms of revenue and EBITDA and the breakdown of AGS and non-AGS top line for the quarter?
Sure, Ravi, Saurabh this side. As I said, on Secure Value's performance, the Secure Value's total top line for 9 months, we ended at 3,367 million with EBITDA margin of 17% from that perspective. And out of this 3,367 million, 1,570 million of revenue we generated from non-AGS customers.
Okay, understood, sir. Sir, a follow-up question to that. I just wanted to know if Secure Value has some presence in retail cash management and how large is this opportunity for us?
So, just to take you through slight background, Ravi, when Secure Value was started way back in 2012, definitely the first objective was to support the AGS captive requirement. Over a period of time, as business got expanded, market requirement also got expanded. We expanded our businesses in other segments. So now we have 3 forms of revenue. One is revenue coming from ATM outsource, ATM cash pickup and ATM cash deposit. Second form of revenue, which Ravi also covered in his speech, is that dedicated cash vans that we have deployed for various customers and various banks and various other retailers also, if required. The third business is doorstep banking business, which I think we're picking up that retail pickup, cash pickup revenue. This business is also where we're putting our focus, but from a number perspective, on a revenue side, that number is small as for this point of time. But as a company, we definitely have a strategy to expand this number of period of time.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Aditi. Please go ahead. Hello, Miss Aditi. Hello, Miss Aditi.
Yeah, hi. Thank you so much for the opportunity. I have 2 questions. Sir, where are we in terms of execution on the orders that we have announced in the past, and when will this start reflecting in our numbers? That is my first question. And second is, do we need any further organization capabilities to handle these new orders?
Did you put the second part, organization?
Capabilities to handle these new orders.
This is Stanley this side. So the two orders which we had spoken about on the SBI front, we expected to start it in this quarter, but the numbers on the reflection will happen in the next financial year across. Executing such large project, we have previously also done in the organization where we executed Axis Bank and ICICI with such large numbers. So the organization is already geared up and has already a past experience executing such orders.
Okay. Thank you, sir, and all the best for upcoming work.
And regarding in the announcement which we done on the Union Bank and the Canara Bank part on the dedicated cash vans, that is already got executed across from us.
Thank you. The next question is from the line of Yug Mehta from AP Capital. Please go ahead.
Yeah, am I audible?
Yeah,
Yes,
we can hear you.
Thank you for the opportunity. Sir, in the past you have spoken about various RFPs being floated by various banks, and we did win some in the last quarter. Do we expect some more RFPs coming our way?
Yes, there are 2 or 3 RFPs which have got floated but has not got finally concluded. So it depends totally how it gets concluded in this quarter across.
Oh, okay, sir. So that's all. I'll rejoin.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Mohsin, an individual investor. Please go ahead.
Yeah, good morning. Thank you for giving me a chance. I have a couple of questions around the debt. Does the company have any plans specifically to reduce the debt, which may or may not include raising capital? Because we don't see that debt reduction probably, in the lines of what it should be. That is the first question. And the second part of the question is around the verticals of the business. Which are the main pain areas of the verticals of the business which are, leading to the debt that we are carrying, or, are laggards primarily because we pre-IPO saw 75 crores of profit and now we're seeing the debt in the books. These are 2 questions.
Sure, sir. So with respect to the debt reduction plan, definitely there is a reduction plan also, sir. If you see, most of the debt that we carry on the balance sheet is a term debt, which has a set repayment schedule and the repayment plan out there. So companies continues to pay that repayment as per the plans that has been agreed between the financial institutions and the company. So basis that, we believe that the debt reduction will keep on happening as we move forward on quarterly basis, and whenever we update the investor and the market on that part. From a business perspective, definitely this debt will keep on coming down without raising any capital from the market. And as we said, we have though we have reported a loss number, but we have a cash back with us so that cash is available with the company for the repayment and everything. From the business side, I think our business is, majority of the business or revenue comes from the payment solution segment. And under payment solution segment, we have a segment called cash payment, which is an ATM outsourcing business. This business requires a capital to invest in the business in the form of ATMs and other assets that deploy on the sites. And these assets then generate revenue period of contracts which range between 5, 7, 8, 9, 10 or more than 10 years also in some of the contracts that we have. So this is a case where we have taken most of the debt on the company, and which is why the term debt has been taken. And this will get paid over period of next few years, and as per the structured arrangement that we have with the banks. And those debts, as we get paid over period of time, will automatically help us to generate more return on the capital also, and will automatically generate more returns for the business also. So, as I think these are the 2 things that you asked from the debt perspective and everything.
Yes, just a final thing. Just a final thing. Is there any revenue guidance for the next couple of years, maybe that can be on the top line the company would want to issue?
So, not as a guidance, but as I said, if you see our business segment revenue, large part of our revenue comes from the service business, and as all the service contracts are very long-term contracts. So a kind of annuity-based business that we run, whether it's a ATM outsourcing business, whether it's a cash management business, or whether it's a maintenance of contracts for various assets and automation solutions that we sell in the market. So So from that basis, we see a good visibility of the revenue every quarter or every year-on-year basis. From an expansion perspective, I think there are 2-3 new contracts which Ravi also mentioned, Stanley also covered, like SBI contract from the ATM outsourcing, which shows us the visibility of deployment of 2,500 machines in coming quarters in the next year, and which has a potential to add up to approximately around 1,100 crore of revenue to the company's top line over a period of next 7 years. Plus, there is the execution of other SBI contracts, which is a one-time revenue in the form of sale, and then the AMC contracts. Plus, also as Stanley covered, that there are many RFPs which are in the market domain and everything, and company will definitely work internally with finance, and everyone is working on it to see that wherever the contracts make good number for us, and from the company strategy point of view, we will like to take those opportunities and get those opportunities added to our top line. So from that perspective, I think the recurring revenues plus these 2-3 contracts give us a good visibility of revenues accruing us to in the next couple of years. From other perspective, I think we've also covered, like, we have a presence in market outside India also, where we have expanded our presence through Singapore and other territories. We have also looking for adding certain more partners to those growth opportunities and see wherever we can monetize those assets, and any monetization of those assets will immediately lead to the reduction in the debt of the company also.
Okay, thank you. If I have further questions, I'll join the queue.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Raj Mehta from Wisdom Capital. Please go ahead.
Hi, thanks for the opportunity. So I just wanted to know, where do we stand with respect to receivables, given that we have taken a write-off in this quarter?
So, Raj, just to, I think that this is the question, or should you have something more, Raj?
No.
Okay. So on the right back side, if you see, Raj, our last quarter's conference call or last quarter's our investor presentation, as a company, we had a commitment contract with one of the party where we have both the parties have agreed to partner this product in India and co-market this product in India. This contract has certain minimum commitment from our side, which we had to do since it was a last quarter of the contract which was getting over. As a process and as a principle of accounting standards and India standards, we as a management, we agree that since there is an obligation for us to pay this amount in over a period of time, we took a provision of that much value in the last quarter, approximately 285 million rupees. But we are confident at that point of time also, and we made small remark in our presentation also and to the board, that we expect that since this conversations have still not been concluded with the foreign party, we are in discussion with them, and we will able to, I'm not saying adjust, but we'll able to apportion this cost a period of time, a period of contract as the contract is getting serviced. So basis that the final agreement that we signed with the party and the final extension that we have signed with them, we were able to demonstrate that we can reverse approximately 120 million of the commitment charges which we had charged to the P&L in last 2 quarters, 285 million in last quarter, and approximately 110 million in first quarter of this financial year.
Got it, sir. Thank you so much, and all the best for the upcoming quarters.
Thanks, Raj.
Thank you. The next question is from the line of Kabir Diwan from Blue Star. Please go ahead.
Hi, good morning, everyone. Can you give me some color on unit economics for CRM and what kind of additions do we see there?
Sure. Kabir, from the ATM outsourcing, the market definitely, as we all know, most of the time and in the history and the past, that ATMs are always used as a machine for dispensing the cash. Now, in the last few years, what we have seen is that the technology has reached to that level where we have started automating the deposit functionality of the CRM also. So we have seen big deployment of all these CRMs, which is called cash currency or cash recycler machine. Means the machine has a inbuilt capability to accept the cash also, give the instant rate to the customer or the person who is visiting the branch or wherever he is depositing the money in those machines. Plus, this machine has the capability to even dispense the same cash to the next customer. So, most of the banks are definitely exploring these options of putting these CRM machines at the branch network, where they can definitely automate their branch operations in the form of getting this cash deposited at the machine directly and giving the instant credit to the customer. and saving a lot of time for branch also and saving some time for the customer's point of view also. And at the moment the process become automation, the risk of errors and other omissions also get reduced significantly. So this continues to grow from a unit economics basis. So definitely this gives us an additional form of revenue to company like us who manages not only the ATM from dispensing but from the deposit also. So various banks are entering into contract with us where we are charging in the form of per transaction fees for withdrawal and per transaction fee for deposit also. But there are various banks where we are right now deploying these machines and they're being using maybe as a pilot one, or maybe they are still making people conversant with these machines as number of deposit transactions are not as big as the withdrawal transaction. We are entering into a fixed fee contract with them also. So you will find a difference of unit economics when we do a transaction fee-based contract and when we do a fixed fee-based contract. In case, Kabir, you need more details, we can definitely speak on that part with respect to unit economics and other ROCs. We will request our PR teams and our marketing team to definitely reach out to you and give you detailed perspective with respect to these numbers on the unit economics of the transaction fee-based contract where we are doing withdrawal and deposit in the same ATM, and unit economics where we are only doing deposit on the machines and on the fixed fee-based contract.
Sure, that's helpful. Thank you so much.
Thanks, Kabir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Amit from HDFC. Please go ahead.
Yes, sir. Thanks for the opportunity. So my question is on the receivable days. So and how it's going to change over the course of the year. So already we are running at high receivable days, and we are like pivoting from transaction based and ATMs to non-transaction based ATMs or fixed price ATMs, and from outsourcing to managed services. So with the new contract that we have won, how do you see the receivable days maybe for the next year, or any improvement from here that you see with these contracts coming in?
I am for this side. So Amit, absolutely on the receivable day side, I think we've been updating the market also and updating every one of you with respect to the company's process and efforts on the receiving and collecting those receivables. Because of all these delays in receivables collection and everything, we have also taken a big amount of loss allowance in our financials in Q2 of this year and even at the Q3 of this year also. But having said that, Amit, though the balance sheet of the company has not been published since the quarter 3 of this year, but if you see on overall basis, you will see a slight improvement in the company's overall debtor days in this number. We can share those cash flows numbers and the change in the working capital to this number, but I'm not saying it's a great achievement from the company side. We're still working on getting those receivables getting collected, but yes, on overall basis, there is a slight reduction in the number of debtor working capital that we have seen on a consolidated basis of AGS. With these 2 new contracts coming from big customers, which are big customers, and what we have seen in the past is that those 2 new contracts will add a big amount of revenue to the company's balance sheet and profitability also definitely. But on the working capital side, I think the delay in receivables and why this collection has got delayed was mostly because of various reconciliations which got delayed in the past. Now, most of the new contracts have automated processes where these reconciliations happen at much faster phase as compared to the old reconciliations. And specifically the new contracts that we got, which is similar to the PSUs which we are handling in the past. Now we have major good understanding of this part. But having said that, since this business is long-term in nature, there could be a possibility of that working capital days will get extended by some few days in the initial part of the contract when this contract is getting implemented, and as a business and teams are interacting with the banks and everyone getting know. But we don't see a major impact of that revenue on the working capital side. As a team, we're working on to ensure that our working capital cycle should swing from where we are right now and should not expand. But yes, I think execution of this contract in next quarter and maybe couple of quarter will help both of us from the market perspective us that how this contract goes and where the working capital cycle is sitting on this because of these 2 new contracts.
And sir, so obviously you mentioned that we are working on improving the working capital cycle. So with that improvement coming in, how do you see the debt reduction to come in? Whether it is the first thing that has to be done, or also in terms of the capex that we are planning to execute these contracts. So obviously these are non-capex kind of ATMs, but still, what is the kind of capex that we're looking for the next year?
So Amit, on the debt repayment, as I said, most of the debt is in the form of term debt, which will get paid as per the agreed repayment plan that we have with loan attached to the repayment plan attached to that loan. So from that perspective, that debt will keep on getting paid. From the execution of this new contract and the new debt for the company, I think, but whatever debt that we have taken in the past also, it's mostly linked to the revenue potential of these contracts and the assets that needs to deploy from that part. And we've been able to demonstrate to the financial institutions and to the other connected intermediaries that these contracts are definitely helpful in the form of overall basis, generating a positive revenue, positive EBITDA, positive contribution, pre-tax IRRs and other things, so that the repayment and everything happens in line with those revenues that are getting accrued from these contracts over a period of time. So from that perspective, I think we'll talk about specifically this one big contract of 2,500 ATMs. In case the cash of the company is, for XYZ reason, we're getting stretched, we definitely have options available to us to reach out to any of the financial institutions and ask for to some debt on that part, because this contract definitely generates that much amount of ROC, which is sufficient to repay even the cost of principal and the interest for a time period.
Okay. And sir, on the POS business, so there's the current portfolio also. If I see 80% of the POS is non-OMC POS right now, and if I see the GTV number, the non-OMC POS GTV number has been coming down significantly. So how do you see this non-OMC POS? Because there is also capex that is going on for deploying these POS machines. So in terms of the unit economics, are these non-OMC POS profitable or making losses?
So Amit, you are absolutely correct. I think as a company, when we started off this ITSL business, our immediate focus was to deploy these POS machines at the retail POS, give them a solution, give them a service, give them a value-added services, and definitely tap them and give them a payment as one of their initial way to be there. Over a period of time, though this market got commoditized, a lot of players, whether they are institutions or whether they are banks, they have definitely have expanded their options available to various all moms and pop stores. And over a period of time, that is how we took a pivot at that point of time and started focusing on the POS, which are specifically created for OMC-based terminals and giving them integrated solutions. So I think that pivot has played out very well for us, and we have a very big market share from a GTV perspective or from a number perspective of servicing those big OMCs and generating a positive revenue. From a retail POS, I think you rightly said the GTV has gone down a period of time, and we see the overall unit economics with perspective. Though the unit economics on a POS basis, number basis, percentage basis looks very promising, but since the value of transaction that gets swiped on those POS machines on a gross basis is very small in value, so percentage-wise, though the revenue looks very good as compared to other businesses that we do for the POS, it's good, but on a value terms, the overall IRR and overall ROCs are quite less. So I think over a period of time, I think OMCs will continue to help us to run this OMC procuring business. And as Ravi also covered in his speech, at the same time, we are ensuring and expanding our issuing side also. We got this contract from Bangalore Metro. We have done a pilot for OMCs with the development of this on-go fuel. And we're going to launch a couple of other new products with very big FMCG in the future. So I think that is again, you can say, a kind of pivot from the companies acquiring to issuance. But I think this is where the market is going forward now, and the issuance is going to be a big area for us as we move forward in the next 12 to 18 months of horizon.
Okay, sir. Thank you, and all the best.
Thanks, Amit.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you everyone for joining us today on this earnings call. We appreciate your interest in AGS. If you have any further queries, please contact SGA, our investor relations advisor. Thank you.
Thank you everyone.
On behalf of AGS Transact Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.